Okay, so we have looked at our time cards and recorded the number of hours and overtime work. We figured out our gross pay. We've also figured out how to figure out federal income tax, Social Security tax, Medicare tax. We have filled out a payroll register that shows the earnings of all of our employees. And then individually, we have also prepared individual earning records to see what each of our employees have done over each quarter. In lesson 12-4, we are going to prepare payroll checks. It's time to write out checks for our employees. The two objectives, we're going to justify the use of payroll checking account and prepare an employee payroll checks. Preparing payroll checks. 3 Green pays its employees with checks written on a separate payroll checking account. A check for the total net pay, the net pay that we figured out in our payroll register, that total net pay is written on 3 Green's general checking account. That check is deposited in the payroll checking account. A separate payroll checking account helps to protect and control cash payments and payroll payments. The exact amount needed to pay the payroll is deposited in the payroll checking account. If the amounts on the checks are altered or unauthorized payroll checks are prepared, the amount in the payroll account would be insufficient to cover all the checks. The bank and 3 Green would be alerted quickly to unauthorized payroll check. Also, since payroll checks are drawn on the separate account, any balance in this account would correspond to the sum of outstanding payroll checks. So again, you take the total of your net pay, you write out one check, put it in a payroll checking account, and from that payroll checking account, you are going to write out checks to all your employees. So when you're done writing out all the checks, that payroll checking account will have a zero balance because you just put in enough to pay all your employees. Payroll bank account. A voucher check has a detachable check stub or voucher that contains detailed information about the cash payment. Most computerized accounting systems are designed to print voucher checks. The voucher, usually referred to as a check stub, contains spaces to enter the date, payee, description, and amount. Here would be an example of the payroll bank account check. Okay, you can see you're going to prepare the stub. And again, you can do it manually or larger businesses will have the computer fill it out. But you prepare the check stub. You write the payee. Okay, who you're writing the check out to. Remember now, this is for the total amount of our payroll is going into First American Bank's account. The date, the description, it's December's 15th payroll, and the total amount. And again, remember that is our net pay to all employees. And then the check would be prepared. And you can see how you are transferring the information from the voucher or the check stub onto the check. And again, this goes into your payroll account. Once it's put into that account, then it's time to write out the employees' payroll checks. Okay, and you can see right here, it was put into that payroll account, so that's where the checks are coming from. You'll notice the top part is the voucher or the check stub, and that has all the information for the employee. You'll see you'll enter the earning information from the payroll register and the employee's time card, so that information will come from that payroll register and the time card. And you can see that's your earnings. You will enter the year-to-date total, and this earnings comes from your employee's earning record, how much they've earned up till this date. Enter the employee's current deductions from the payroll register and record the total, so that'll come off that payroll register that we prepared in section 3. Add each current deduction to the year-to-date amount reported on the employee's prior check stub and record the total. So that's how much they've paid in each one of those up to date. And the total the current and year-to-date deduction columns and calculate and enter the amounts of the current year-to-date. And then the check stub or the check will be prepared for each employee's payroll check for the amount of the net pay. And you can see it's the date, the name of the employee, the amount of the net pay in both words and numbers, and then whoever is authorized to sign the payroll checks. And again, remember, these are coming from the bank because we put the entire amount of payroll into the payroll account. Electronic fund transfers. Okay, a payment of an employee's net pay using electronic funds transfer is called a direct deposit. A business that pays its employees using direct deposit transmits payroll information to its banks. The bank electronically deducts the total amount from the employee's net pay from the business payroll banking account. Each employee's net pay is deposited in his or her bank account. The payroll must still be calculated, but the payroll checks are not written and don't have to be distributed. Each employee receives a printed or electronic statement of earning and deduction resembling a payroll check. The voucher portion at the top includes a reference to the employee's checking account number and the amount deposited. The bottom portion contains several notations clearly indicating that the document is not a check. Bank information such as bank routing number and the account number are not displayed. And you can see how you'll get a receipt. This is like your receipt or your information about your check, but it's just electronically deposited into your account.